Assalamu Alaikum everyone, welcome back to the channel. In today's video we are going to look at my overall portfolio. This is my trading 212 account. I also have a Freetrade account which at the moment is about £1,700 worth of stocks in there. If you would like to join these companies, trading 212 or Freetrade, I'll put the link in the description just so you can use that. You'll get a free share, I'll get a free share. So that's one of the things that you could do. If you are new here, please subscribe and like the channel. Let me know what you think. If you have any questions, what I'm doing here is to share my journey, be transparent. I don't know everything. However, I'm going to share my journey and show you what I'm doing. So if you like that, please subscribe. Let me know what you think. Every company that I'm investing in is a company that is Sharia compliant, and that is very important to me, and that's something that inshallah I will be doing as going forward. So if you like that kind of thing, please let me know. So I'm going to start from the top, basically share with you and talk about every single stock on the that I've in my portfolio. If there's no change, then I'm going to leave it. If there's some change, I'm going to talk about it. Some of these companies I've already done videos on, so if you would like to just go and have a look at some of my old videos, and I'm sure you'll be able to get some values out of those. All right, so the first company we're going to look at is overall portfolio at the moment, by the way, is about £25,900. This is basically some money that I have earned through my job, and I actually invest every single month about £1,000. I'll talk about that a bit more later on. So the first company that we're looking at is 3M. 3M, I haven't made any change since last time, is up about 17.5%. Apple, since last time, I think I've sold 5 shares. The reason for that is I just wanted to take a little bit profit off the table, but there was another company that I really liked which I wanted to buy, basically another company that I actually liked better, and I thought, you know what, let me take out some profit and buy that company, and that company was actually Cummins, which I will talk about in a second. Now, I do love Apple. It's a great company. They do pay small dividend, and is obviously growth company, and they are a very innovative company. So I'm actually happy the fact that I've got that many shares. But at the time when I start selling them, it was actually my biggest holding. So I'm happy the fact that I've actually sold a little bit, because what I'm trying to do is to not have more than 10% of one stock in my portfolio. So I've been trimming all these companies down just to make sure they're under 10. As you can see, Tesla is just about 9%. I will talk about Tesla in a second. Now the next one is Broadcom. Broadcom is down at the moment about 4%. It is a very volatile company, but a great company. I love their dividend, amazing. But and I know this company will be hitting about 600 or something, because again, they are chip makers, and at the moment there's chip shortage around, so I think they're in a great place for next couple of years. A little bit overvalued at the moment, so maybe you might want to wait if you like to buy this company. Clorox, since the last time I actually bought 3 more shares, I think. Okay, great company, really good dividend, solid balance sheet. They've got tons of free cash flow that they will use to pay off the dividend. Cummins is one of those companies that I don't think many people are aware of. I've spoken about it recently. They actually basically produce engines. Okay, and again, a lot of the engines they actually produce is for medium duty truck, buses, and recreational vehicles and so on, and light duty whatever. So they are very small company, but not many people know about them. They have a great balance sheet, pay nice dividend, and again, the reason I wanted this company in this portfolio is to have a balanced portfolio, right? You don't want to be heavy on tech. You don't want to be just tech, and then when tech goes down 10% or the Nasdaq goes down about 3%, you lose about half of the worth of your portfolio, which is not great. Emerson Electric, again, another industrial company. I haven't done anything to it lately. Home Depot, by the way, great earnings recently. If you want to check that out, if you really do that, if you want to buy basically a consumer discretionary company, look into Home Depot. Really great company. They have a great quarter, and they've got really some amazing balance sheet. So have a look at that. Johnson & Johnson, it might as well be an ETF on its own. Very well diversified company. They have tons of products. They obviously involved in the COVID vaccine as well, and which didn't go well, but I think they now said it's safe to use it and so. Okay, so again, great company. I haven't done anything to it. Really good dividend as well. up about 7%. Kimberly-Clark, the tissue company, they've been down for a while. I love this company. I've bought, I think, half a share very recently. I'm just going to keep what I have already. Lowe's, again, another home improvement company. Really like the company. They're undervalued at the moment. They've basically released their earnings as well. Really great quarter as well. So you might want to check that out. Medronics is a new company I've added to my portfolio. I've only got about £14 worth of shares in here. But this is a really overvalued company at the moment. So I just bought it because I had that £15 lying around. So I thought, let me put it into this company and just see what happens. If it goes down, I'm definitely going to buy it. But at the moment, what they do is basically they create equipments that are used in hospitals. All right. So they, even though they are in healthcare company, they just do the equipment side of things, which is nice. Then you've got Merck. I haven't done anything to this company for a while. I've got 19 shares. It's down about 3.5%. Microsoft, great company. I bought, I think, about 4 or 5 shares since last time. They're now one of basically my biggest holding in this portfolio. And then I've got PepsiCo. Haven't made change to it. Again, paying some amazing dividend. I'm going to keep it in there. Pfizer, I've got 15 shares. Brilliant company. I think I might buy more if it goes down below 33 shares. $33 per share. Ppg Industrials is a paint company, is in the material section, way overvalued at the moment. When I start buying this company, it was 143 per share. Right now it's 178, so it's gone up quite a bit. So hopefully if it comes down to this line here, okay, then I might actually start buying a little bit more of this company. Procter & Gamble, again, great dividend, great solid company. Now a lot of the companies in my portfolio are solid dividend, blue chip paying companies. All right, so they pay you very good dividend. They go up about 3, 4, 5%. They're solid company. They're not crazy tech companies where they go up 10%, 15% every single day, whatever. Okay, so they're very stable. They've been around. They have a lot of cash, and that's all I want. Okay, top of that, obviously, I've got the Apples, the Microsoft, the Teslas, the Qualcomms, and so on, the Broadcoms, but it's balanced. Okay, so it's not just on value or just tech. You have to have a balanced portfolio, and which we always talk about in this channel. Qualcomm, like I've said, I bought, I think, 3 more shares since last time, slightly down at the moment. A lot of that is probably the FX impact, which is about 55 or basically about 5%. Again, it's because we're buying US companies. We obviously, that's the price that we have to pay. Rio Tinto is very basically it's a new stock that I've included in my portfolio since last time. I've got 5 shares. They are UK based company, obviously, and because of that, I'm actually happy with the buy that I actually made, because I got rid of APD and bought this instead. So APD is American, so I bought Rio Tinto. Now you can see about 5% up, and this is actually undervalued, whereas ADP was actually overvalued. Tattoo Chef, I had a little bit of money lying around. The stock was down, so I bought more. I have about 30 shares on the Freetrade account, but I bought a little bit more in here, so I'm just gonna keep it in there, let it go. Tesla, I've sold 1 share since last time. I think I had about 7 shares last time I did a video. I've taken the money out and then reinvested into other companies. Love the company, but I'm taking profit out as much as I can, because as you know, Tesla is very volatile, way overvalued, and at the moment I don't have time to actually, honestly, I think I'm gonna sell 1 more share and then leave it like that. It's probably be about 8% of my portfolio, and then I'm just going to leave it like that. Unilever is coming back. It's been down for a while. It's been down almost at 10% or 6-7% at some point, but now it's actually coming back again. Union Pacific, I bought 3 or 4 more shares very recently. These are basically railroad company in America. It's been around since 1800s. They paid good dividend. They've raised their dividend very recently as well. Visa is a brand new shiny, literally bought it not long ago, shiny new stock that I've included in my portfolio. Great company, undervalued at the moment, not by much. It's about 2-3% undervalued. And I think this company will benefit when people go back to work and things go back to normal, because there will be a lot more transactions happening. Even though people are buying things online, I think when everyone goes back to work, everyone goes back to where they belong, or where they, what they just keep doing what they used to do, traveling and all that stuff, then I think this company will. So this is one of the reopening companies that I think it will benefit a lot Okay, so I'm gonna keep buying until it becomes too much and is overvalued. At the moment it's slightly undervalued, so I like the company and I bought it, and it's been in my portfolio, in my watch basically list, so for a long time. And recently it hit a buy, and I thought, you know what, this is the time to buy a bit more, for basically to start a new position. And finally is West Management. I bought 5 shares long time ago, 112 per share, and since then it's gone up to $141 per share. So I'm gonna keep it 21% up. Happy days. If it goes down a little bit, then I might actually buy more. So that is the overall portfolio. So I've got 25 basically different companies in here. I also have in the dividend paying section of my portfolio, I have Taiwan Semiconductor, which is in the Freetrade account because I cannot buy it in here. Okay, because the ISA account that I've got here, which is basically tax sheltered account, I'm not allowed to buy basically companies that are not in the US or the UK and so on. So that's the overall portfolio to show you, and then I'm going to very quickly show you the growth portfolio here. I've got CrowdStrike, Tattoo Chef, I think I've got 34.5 shares, and then Tesla and basically Salesforce. Slightly down, as you can see, some of them, but I'm happy to keep. I might add to them in the next couple of months because I actually neglected them for a while. I haven't done anything to it because I'm trying to actually buy less of a tech, even though I know Tattoo Chef is not part of the tech companies, but obviously the other two are, so I'm going to leave that for a bit. Now, my overall portfolio, so this is basically putting together all of it. Okay, it's about $33,800, right? Annual income is $753 per share. Basically that's what I'm receiving annually. That's the dividend coming from the companies that I've actually owned. Now, and if you look at it, it's about 2.2 dividend yield. And when you look at the calendar, for example, this is basically what I've been getting paid every single month going forward. Okay, some months obviously I'll get more because this is when these companies are paying. So I think a lot of the majority of companies that I have paid March, December, September and June. Okay, the rest of them you can see is small. Again, my plan is to make sure hopefully by the end of this year this is about $1,000, okay, which then gets reinvested back into the overall portfolio. So that's my aim. So I am going to create a portfolio of stocks, blue chip dividend paying companies that annually pay about $1,000 per share. Okay, the overall goal, inshallah, is just to keep adding to it. I'm not really worried about what happens in the stock market, whether it goes down, it goes up. I've done a lot of research to buy all these companies, right? I know what they do and I know their balance sheet, and now they're going to be around for a long time. If they go down, I will buy more. That's my strategy, right? If I have the money and Clorox goes down today, I will buy more because I know the company has not changed. So if they had a bad quarter and I know it's because of COVID or because of other situations and the stock goes down, I will buy more. Why? Because I'm a long-term investor. I know these companies will bounce back. Okay, there's a few companies in here, including 3M. When I first bought, okay, it went down almost at 10% or whatever it was. Look at it now. Basically, I'm making, if I was to sell right now, I would make $236 on profit just owning those companies, just holding it. And so far they have paid me a lot of dividend. Okay, same goes for Home Depot. It was down almost 6-7%, whatever it was. It's back again. Okay, so that's my strategy, buy and hold. So since March, I've actually invested almost £3,000. So my plan is to add about £1,000 every single month going forward. Some months it might be a bit more, some months it might be less. So every single month I save about £1,000. Just put it in one account, leave it there, and if I see a drop in the market or basically I see a company that I like, I'll buy basically a bit more the companies that I own, and obviously start new positions if I need to. So that's my overall goal. That's my overall portfolio. I hope you like this transparency. I hope you like the channel. I hope you're finding some value. Like I said before, my aim is to share my journey. I am not a financial advisor. All I'm doing is buying stocks that I actually trust and like. I've done my research. I've actually looked at it from Sharia compliant. I use Zoya account. I have access subscription to Zoya account. They're a great company. I like it. Literally they probably don't know who the heck I am, but the most important thing for me is that I just go into the account, put the company that I'm looking for, see if they're Sharia compliant, then do a bit more research, and then obviously sometimes I even do some of the calculations, the basic calculations, things like when you look at the debt, for example, that kind of thing. I can do it myself, and I know how to do it, and I've shared videos before how to do it. So yeah, so that's the plan, inshallah. We'll see how it goes. Like I've always said to you, all I want to do is share my journey with you guys, to show you every single company that I own. Now, one of the things I do is when I buy in companies, I look at if they're free cash flow, which means these companies are making profit, and that's the most important thing. Trust me, you wouldn't invest in a company that's not making money unless you know they're going to make money in the couple of years, right? And a lot of these speculative companies out there right now, they're not making money, and that's one of the reasons why people have been selling stocks and obviously lost a lot of money. Now, if you are buying companies that, like for example, Apple's, Microsoft, the Procter & Gamble, the MD, whatever, these companies have been around for a long time. They do pay dividend. They have a great balance sheet. You know their product. You probably use it all the time, and that's what you need. Visa, for example, could be overvalued at the moment, but I bought it very recently when it was slightly undervalued, and I really like the company. I like what they do. They basically not in the finance side of the thing. They are the technology behind the cards that we use. So they don't actually do transactions, like they don't deal with riba and things like that. Now, again, the reason I'm showing you this is because I wanted you guys to think about your portfolio. Look at your portfolio and see what you've got so far. If it's too much speculative companies, then maybe it might be a good, idea to kind of start looking and diversifying your portfolio. One of the things I've always shared with you guys is this section of the diversification side of things. And again, as you can see, I still have a lot more in tech, okay? But again, slowly I'm building up the other companies as well as adding materials. Soon I'm looking at communications. I'm going to look at real estate. I found actually a couple of really good companies in real estate. Financials, I found a couple of those. So I'm going to start adding to those as much as I can and make sure each sector is about 25% of my overall portfolio. So when something happens to that sector and it basically there's a sale in that sector, I'll buy more rather than being scared, whatever, right? But if you had 50%, I've got a friend whose portfolio is about 50% Tesla. Okay, sometimes it's more depending on whether it goes up or down. Now that is crazy. Okay, so we just need to make sure that I'm not criticizing him or anything like that, and some of you might be actually in that position, but you really need to think about it, because the money that I'm actually putting into this is money that I save every single month. Okay, so it's important that that you actually think about what you're doing with your money, inshallah. Anyway, let me stop right there. I hope you enjoyed this. If you have and you find any value in this video, please subscribe, like it, let me know what you think. If you have any questions, I appreciate all the comments. I appreciate all the things that people have been asking me in the last few weeks. I will answer as many, every single question that you put in the comment section. If I haven't answered it already, please let me know, inshallah. Take care, everybody. Assalamu Alaikum. I'll see you next time.